Were you aware that by 2030, Tesla might be valued at $40,000 per share? Even though this is only a prediction, it's interesting to see why Tesla was valued so highly. To find out, be sure to keep watching and tuning in. The valuations of Tesla are getting more and more astounding. It is probable that the typical American will no longer be able to purchase the company's stock. Nowadays, Tesla is practically a household name, and many people aspire to have their own electric car. You'll learn why it's estimated that Tesla will cost $40,000 per share by 2030 in today's video. Leading the electric vehicle (EV) sector is the sustainable energy business Tesla. Even with major firms like Tesla, investors are highly concerned about the future of their investments given the current state of the economy and the lingering dangers of inflation and a worldwide recession. Nevertheless, a lot of people are still optimistic about the company's stock because they believe it has the potential to do well in the future. Many increased their different values of Tesla stock in spite of many obstacles. Goldman Sachs Wall Street analyst Mark Delaney raised his price estimate for Tesla stock from $1,125 to $1,200 in January 2022, all the while keeping a buy rating. As the greatest concept in the electric vehicle industry, he also ranked Tesla as one of his top picks for 2022. He went on to say that Tesla is the industry leader in electric vehicles. The CEO and CIO of investment firm ARK Invest, Cathie Wood, claims that Tesla is 3 to 4 years ahead of electric vehicle automaker and manufacturer Lucid and Rivian in terms of battery technology. According to Wood, Tesla is actually ahead of most others. This, she claimed, is a result of Tesla's increased inventiveness in the battery industry, particularly when they experimented with ultracapacitors and added silicon to anodes. Wood thinks Tesla is 3 to 4 years ahead of the competition because of these factors. Adam Jonas of Morgan Stanley likened the state of EVs today to a race that Tesla has so far been dominating. He likened the electric vehicle market to a marathon, stating that Tesla is leading at mile 21 and other competitors are still in the second half. In defense of this assertion, he said that recent car delivery records demonstrate how solid Tesla's position is and will continue to be as the marathon goes on. Along with other investors, he changed his target price for the automaker's shares from $1,200 to $1,300 and went on to forecast that this year's delivery numbers will surpass 2 million. Goldman Sachs analyst Mark Delaney stated that he increased his price objective from $1,125 to $1,200. In addition, he ranked Tesla stock as the finest concept in the electric vehicle industry and put it in the outperform category. In February, Piper Sandler Companies, an independent American investment bank and financial services provider, increased its price target for Tesla to $350. This suggests that purchasers may anticipate a gain on the company's share of up to 55%. Piper stated that it updated its valuation to take into consideration new deliveries, capex, and margins, and that it now anticipates Tesla to produce more cash since the stock may be worth more. Tesla is a clean energy company that has the potential to surpass the fossil fuel sector. As a result, the stock of Tesla will eventually outperform, providing a far greater chance for it to reach $10,000. Tesla's stock has a bright future and will likely double or possibly triple in value in the next years, predicts Chamath Palihapitiya. Tesla's valuation model was updated by ARK Investment Management LLC, an American investment management company with headquarters in St. Petersburg, Florida. The company oversees multiple actively managed exchange-traded funds and has set a price target of $4,600 for Tesla stock in 2026, with the potential to reach over $20,000 by 2030. The most recent version of ARK's open-source Tesla model predicts a value per share of $4,600 in 2026. The bull and bear scenarios are estimated to be worth $5,800 and $2,900 per share, respectively, and are calibrated to the 75th and 25th percentile Monte Carlo results. Cathie Wood, an American investor who is frequently referred to as the most underappreciated investor in the game, founded and oversees ARK Invest. Not only does she have the evidence to support her remarkably astute claims, but she also makes extremely compelling investing recommendations. In an interview, Wood stated that her base case for Tesla is roughly $3,000 per share and that their estimation of the company's success has increased. She clarified that this is because, in spite of other businesses' forays into the electric vehicle sector, their market share increased significantly rather than decreased. As early as 2025, ARK Invest predicts that Tesla will be able to produce between 5 and 10 million cars. According to an email that Electrek, an American news website covering sustainable energy and electric vehicles, got from Tesla staff, Tesla will eventually be able to create a fully autonomous ride-hailing network that will be known as Tesla Network. Both a large profit and a large margin will result from this. Musk stated that he supports ARK Invest's $3,000 price goal in a communication to his staff. With a strong performance and a projected share price of $3,000, Tesla could be valued at about $3 trillion, making it the most valuable corporation in the world. With a market valuation of nearly $730 billion, Tesla is currently regarded as the most valuable car manufacturer in the world. Renowned YouTuber Dave Lee thinks that in 8 more years, Tesla's stock might rise even further, possibly even 100 times higher. This comes after 8 years of owning common stock, during which his company's stock increased 100 times. He revealed that when he first purchased Tesla stock, he anticipated that the company's market valuation would grow tenfold, from $3 billion to $40 billion. Indeed, according to Ronald Stephen Barron, an American investor, mutual fund manager, and the founder of Barron Capital, an investment management company, Tesla easily outperformed Wall Street's estimates of $2.20 to $2.30 per share and $18 billion in revenue. Do you believe that the current prices for Tesla stock are fair? Post your ideas in the space provided for comments below. The operating profit for Tesla exceeded analysts' expectations by almost $1 billion. As a result, Tesla shares saw a 5% surge in after-hours trading to $1,017 per share, a notable rise from the closing price of approximately $976 per share. This is possibly one of the reasons Warren Redlich and other investors have the same outlook on Tesla's potential for success in the future. He even went one step farther than other investors, speculating that the shares of the company may be valued at $40,000 per share by 2030. Having practiced criminal defense and personal injury law for 26 years, Warren Redlich is a graduate of Rice University, Stanford University, and Albany Law School. He resigned in 2019. Warren started creating videos about Tesla, SpaceX, and other relevant subjects. He has 26,000 followers on Twitter, to which Elon Musk has responded 8 times. Warren is well known as a fervent Tesla supporter in the community. Additionally, Warren is creating a single-passenger electric car that will be used as a self-driving robotaxi in impoverished nations. Redlich added his 2 cents while other analysts and investors discussed why he believed Tesla was leading the EV market. He clarified that one reason Tesla is so far ahead of other firms producing electric cars is that they have nearly finished developing fully autonomous driving, FSD, technology for mass market distribution. After that, he presented the battery revenue model to show how much Tesla's shares might be worth in the future. The aforementioned model states that a $30,000 vehicle with a 50 kilowatt-hours battery pack generates $600 quote in revenue. Tesla generates $600 billion in income each gigawatt-hour at 1 Tesla watt-hour, with a target of 6 terawatt-hours by 2030. With a price-to-sales ratio of 5, that translates to approximately $3 trillion in revenue. A $15 trillion market cap is that. Based on the present price, and excluding any potential share price splits, it may be calculated that the share price of Tesla stock is approaching or surpassing $10,000 per share. Others questioned Ford, GM, and VW about what would happen if they produced electric cars, but Warren just wrote them off as mere competitors because of how far behind Tesla FSD they are. Even though the financial industry's top investors and analysts have made these predictions and conjectures based on their own in depth research, you should still make your own observations and do a comprehensive investigation before making a wise choice. Since the stock market is highly unpredictable, investing in stocks carries risk, which is why these are recommended for you to do. Check out our other videos on our channel for more information about Tesla stocks. For clarification, I made a few grammatical fixes and changes. Tell me if you require any other changes.